Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley. Bill, you've got two picks for us this week, and it's really away from the the headline grabbing stuff. What have you picked?
Well, I've looked at the 350, and I'm sure in this market you'll either do nothing, sit tight. You either look for breakouts, or you look possibly for the other end of the telescope at the ones which are bombed out. Well below their 200-day moving average, and I've used the 200-day moving average as the yardstick as to performance. And the first one, Jardine Lloyd, is near the top of the tree in performance, 24% above its 200-day moving average, which in this market is pretty extraordinary, I think.
I think you're absolutely right. I mean, I think you'd do well to find a share that's done better than that.
Yeah, I mean, the other candidates in that actually are moving in a similar way. Hiscox, Amlin, Benfield, British Insurance, Catlin, and Beazley all have this sort of sector of non-life insurance written all about them in there. So they're all doing pretty well. So that's an interesting area. So they are performing, without doubt, one of the best performing sectors in the market at the moment.
Just an aside, Bill, away from charts, and probably a bit unfair to ask you because I know it's the charts that you look at, but the insurance sector's been drawing a lot of attention for sort of the wrong reasons. You think of AIG and the big insurers. Why are these ones doing well? We're heads together. We've been actually thinking, well, why are these doing well? I mean, sort of it's an extraordinary happening. I mean, the rates of growth and the money they're receiving, and the investment income is shrinking, or not as strong as it was because of the turbulence of the world markets. I guess the premiums have withstood any form of downturn. So I think this is probably one of the keys, I would have thought. Okay.
I can't. I mean, it's odd, but it's sort of. But the trading statements have been very good.
Yeah.
But we've seen trading statements from other companies which have been good. But this, right across the board, this is extremely strong. With Catlin are up today, about 5% today, and that actually is one of the worst performing shares in the sector. So I was going to suggest, well, do we look for the best performing in any sector? And I think that's the route we take in this particular exercise. So. Jardine Lloyd is the best performer in that sector, outperforming by 33% the actual underlying sector. So it's very, very strong.
Absolutely.
I think the chart looks extremely good. I mean, look, it's making new highs, or did make a new high a couple of days ago. Its relative strength against the market is very high. The short-term indicators are very strong, positively. So trending up on a short-term basis, definitely. But as to why and how far it'll go is always a big question. I haven't got the answers for those at the moment.
Okay, Bill, but nice to see a share doing well and buying into a trend of strength there. Okay, now the other one you've picked for us is a completely opposite example of that.
Yeah.
It's a share that really hasn't done very well at all.
Absolutely.
UK Coal, I know a bit more about this stock than I did about the other one, but not much. Talk us through the chart.
Well, the chart was sort of it broke down, and it was looking very promising. And from mid-August, I suppose you could have said, well, it's not going there. But it's always been had a lot of promise of property values and what it could offer as an alternative with the energy as well. 10% of the business comes from that, so it always had that in the background. But recently, it's the bad weather, and I think in the coal area that it's mining, it sort of has proved a stumbling block for it, and it's issued a profit warning and drifted back. But even more so, recently, is the largest shareholder at the moment has taken on an exploratory view with the company to look at wind farming,
right,
which has taken a different stance to the energy that it was in before. So this is now changing, I suppose, the complexion of the company short term, but it is the other end of the telescope, something which is well oversold, and you could say, well, do I go for a trending stock or do I go for an oversold stock? And it's just the idea here is behind this is to say, well, what sort of investor am I? Am I looking for bargains at the bottom, or value stocks, or perceptional value growth stocks moving higher at the other end? So that's just basically the idea of looking at these two, rather than say, well, look at the indices and say, well, the S&P isn't holding 900 yet, and is it going to hold or not? Well, we're in a limbo. The jury's still out
and it doesn't look terribly promising, I must say, at the moment. But there are rate cuts ahoy and all sorts of happenings in the market, which hopefully will be erring on the positive rather than just the drip of negativity that comes through.
When do you think we'll know what direction it's going to be going in?
Well, we know the direction already. The truth is not very good. It's downward direction, and but we know the rates are coming down. We know that we saw the lot from the couple of studies we showed last time is that rates always come down in recession times. It's a case of, well, how far into the recession are we? And most of the recessions, bottoms occur in the market halfway through a recession, or about 58% through. So it's a case of how long do you think this will be? And if it's short, if it's swift, then and this is the bottom, then this could be it. And some people are suggesting, well, perhaps it's going to be a bit longer, in which case it could be drawn out as to when the bottom will actually occur. So, and the other thing with these bottoms is, recessions and bottoms is that they are predefined after the event. So
precisely,
well,
yes.
we didn't know we were in recession. So, and this is one of the problems. But
that's what makes it so difficult.
It makes life difficult. But certainly 3,800 seems to be a big sticking point at the moment for the market, even though we're drifting back today, and there hasn't been a lot of volume as such. So, and one of the other points I mentioned before is the oil price has to turn. We have to see other things rather than the dollar and the yen being stronger. We have to see other forms of investment sort of turning up, mainly commodity side, perhaps gold turning up. And showing there's inflation kicking in, and certainly an oil price kicking up, so that it suggests that the demand is coming in for oil, and there is some growth coming into the system. But with Japan being in recession today, or being the next recession, it's not. So that's not going to be very supportive to the oil price either. So it's not painting a very positive picture at the moment. But a lot of that might be in the market already. It's the case of how much is priced in equities and how much more it can take before there's new bad news coming through, or glimmers of hope coming through the other end.
Bill, on that note, we'll leave it. Thank you very much for those selections today. Very interesting to look at a different part of the market when everyone else is everyone's so focused on the main indices. Understandably, it's nice to sort of ferret out opportunities elsewhere. Before we go, just a quick sort of, I suppose, shot at looking at what's going on, a snapshot, I guess, of people's sentiment. You talk to investors on a daily basis. What are they feeling at the moment?
They're quiet. I mean, it's sort of. It is a quiet period for us, which is no bad thing. I mean, we're getting different categories of people coming in, speculators mainly, and there were certain investors that will come in when the market goes below 4,000. So they sort of have a mix, really. A different category at the moment. The ones who are more speculative at the moment. Of course, without the trend being positive, it's difficult to gauge. But that seems to be the tone at the moment.
Bill Rook from Redmayne Bentley, thanks very much for joining us today.
Pleasure.
Chart of the Week with Redmayne Bentley.